In recent years, companies and banks have been focusing more and more on ESG, environmental, social, and governance factors, with some equating sustainability to risk screening, data, and compliance. In this context, we turn today to values-based banks to help us understand what can be achieved with ESG screening and what additional impacts can be created with an approach to banking centered on enabling social empowerment, economic prosperity, and environmental regeneration. That is, the triple bottom line approach to banking. This session presents learnings from leading values-based banks in a world with ESG. It seeks to inspire market participants to adopt and reward the sustainable behaviors of values-based banks to eventually create a sector strategy that goes beyond ESG. The 9 practices for a bolder approach to banking are the following. First, broadening ESG screening to impact screening. Second, ensuring knowledge sharing with all stakeholders. Third, base decisions on intentionality of a positive impact. Fourth, aim to provide finance to socially relevant clients and not only to credit-worthy clients. 5, expand product portfolio to attend to the need for finance. 6, reconnect deposit owners with loan customers. 7, stimulate loan recipients to transform their practices. 8, raise the voice of banking for just institutions. And 9, tailor your organization to deliver a positive impact. The practice of values-based banks are distinct because they lead the transformation of banking and finance in their respective communities, countries, and regions, and expand their reach and impact by supporting others on the way to change. To further examine how they do this, how they put in practice the 9 examples already explained, we have invited 3 values-based banks to this conversation: NMB Bank in Nepal, Banco Solidario in Ecuador, and Banca Etica in Italy. So let me first give a warm welcome to our speakers. Please turn on your cameras now. Our first guest is Sharad Tuladhar. He is Chief Policy, Environmental and Social Officer at NMB Bank, Nepal. Sharad is a banker with over 30 years of experience in the field of environmental and social management within the Nepalese banking sector. Avelina Perez, Corporate Affairs Director at Banco Solidario in Ecuador. Avelina led the communications and cultural perspective of a merger between 2 microfinance banks in Ecuador and has integrated stakeholder engagement, communication, and sustainability for a corporation. She holds currently responsibilities over corporate affairs in 2 regional banks. And Tommaso Rondinella is Head of Impact Models and Social Environmental Assessment of Banca Etica in Italy. Tommaso started his career as a policy officer at a civil society network. Prior to joining Banca Etica, he worked for 8 years as a researcher at the Scientific Secretariat of the Presidency of the Italian Institute of Statistics. So welcome, warm welcome to all 3 of you. Thank you for joining me in this conversation. To start with introducing your organizations, I would like each of you to please answer the following question, and I will start with Tommaso. We are asking banks to think bolder, Tommaso, and could go beyond ESG. Tell us a little bit about Banca Etica and what does your bank understand by sustainability and impact?
Thank you. Good evening, everybody. Thank you for the invitation. It's a pleasure to be here. Banca Etica is a cooperative bank offering most commercial banking services, but still focusing on the idea of ethical finance. So in our approach, the idea of sustainability is something that we don't use too much because in this very period we consider it a little bit too limited. Actually, one of the slogans that we have been using in our communication is much more than sustainable. We have seen that sustainability is right now too much linked only with certain environmental aspects, while we put much more attention, of course, on the social aspects, but also on the governance ones, both internally and externally. So both on the side of our own governance, our transparency, our cooperative model, as well as in the one of our clients. We think that it's not enough to talk about sustainability if you want to achieve a full consistency, a full coherence in all your activities, avoiding what we can call a shelf model, a bank in which you can buy the sustainability product and unsustainable product. This is something that we want to absolutely avoid. And last but not least, there is an issue about the kind of finance that we want in the world. So we try to focus on real economy. We try to focus on change and avoid any speculative tool and a finance that is seen just for maximizing profits. With regard to impact, we have the broader approach, a general ability to generate change and a positive change, and this is quite enough from our point of view.
Thank you, Tommaso, for highlighting the importance of congruence and also the importance of choice of what type of finance to offer. Now I would like to invite Avelina. Avelina, could you answer, please, the same question? What is it for your bank, sustainability and impact?
Hi, hello, good afternoon, good morning, wherever everyone is. Thank you for the invitation. And Solidario, as you rightly presented, is a leading microfinance bank here in Ecuador. And we currently have about 450,000 clients, almost 1,000 million in assets. Basically, I think it's important that we start from our mission. We were created close to 30 years ago to serve large segments of the population, seeking to promote their progress and their quality of life. And our purpose is to accompany them in this process. How do we understand sustainability? Well, we all know that sustainability is the capacity to operate, to grow in a mutually beneficial relationship with our different stakeholders and generating positive impact on all the parties involved. So, and that includes, as you said, Adriana, the financial, which is absolutely key, but insufficient, and the social well-being and progress and the environmental component. So given on the one hand, our mission and our purpose, and on the other hand, what we understand as sustainability and impact, these two are embedded in our business model and in our culture, which is super important. So it's not an add-on. It's something that it's at the root of our business model, and it is part of our offer of products and services, and to adding value to the clients and their families. Just a quick example, we have, for example, for years now, our social indicators, as we have our financial indicators, and basically our social indicators measure how we're doing with our mission statement. If, you know, it cannot only be a statement, it has to have indicators and goals and numbers. And we are also aligned with our key SDGs. In our case, they're number 1, 8, and 10. And so our business goals are aligned with those, and they have metrics and they have objectives. As business goals, for example, and SDG goals, that percentage of financial inclusion, percentage of vulnerable populations we attend. And there we take, for example, the capacity to cover basic goods basket. We have a large percentage of clients that are not in that capacity, and we set indicators of minimum, maximum percentage of women head of household, et cetera, et cetera. A maximum percentage of environmentally risky activities. And we have a dashboard with the SDGs, indicators and results, and it's followed just as we would follow a financial dashboard. We're currently finishing an impact study with microfinance rating that also evaluates how we impact in the economies of the households and the businesses of our clients. So it's basically embedded, and sustainability and impact is just a natural result of our reason why. So.
Thank you so much, Avelina. And I hear very interesting here the process of accompanying clients along their evolution towards more sustainability, empowerment, and prosperity. Thank you so much for those examples. And now we turn to Sharad from NMB Bank. Sharad, please, for you, what is for NMB Bank sustainability and impact? And please tell us a little bit more about NMB Bank.
Thank you very much, Adriana, and hello and namaste to all the participants. Please let me put it this way. NMB Bank from Nepal is a GAVB member, a commercial bank with a strong sustainability aspirations and a sustainability strategy. So to introduce a bit more, we intend to have 50% of our lending portfolio towards real sector, that is financing to real economy, and that would include hydro, agriculture, infrastructure development, tourism, education, renewable energy, fossil fuel replacement proposals, etc. We aspire to have 100 sustainable projects, 10,500 ton carbon offset, PCAF disclosures, and ESMS of IFC performance standards by 2025, out of which we have achieved a couple of them. In our own operations, we intend to maintain at least 30% neutrality in our banking operations. We intend to replace our fossil fuel vehicles, 50% of our fossil fuel vehicles by electric vehicles, reduce 70% of our paper consumptions by 2025. We have strong DFI relationships with at least 7 DFIs at this point in time, with $101 million of investment with us. So connecting this with GAVB's value-based banking, I think focusing on real economy, people, planet, and prosperity as a triple bottom line, being client-centric, having long-term resiliency, and transparency as a priority, we are very much focused toward it. So that's how we consider sustainability and impact financing. We recognize environment, social, and governance principles as a fundamental, but we also believe in a more expansive view of responsible banking. For NMB, sustainability means not only ESG criteria, but we aim to think beyond and be bolder. So it's not just compliance, but we are finding ways to contribute more towards a sustainable future. Thank you, Avelina.
Thank you, Sharad. So I hear the ambition once again and the continuous effort to prioritize real economy and to prioritize positive impact on people, planet, and prosperity. Thank you so much to all three of you. Now we continue our conversation with a new round of questions to our respectable guest speakers. Tommaso, let me start again with you. Banca Etica makes a strong effort in measuring the impact they create. From your experience, how can organizations start their journey to transform from business as usual, and how to measure this journey?
Thank you. Yes, we have been publishing our impact report since the last 4 years, and it is based on a process of social and environmental assessment that is very structured, with a questionnaire that is quite bountiful for our clients. It's more than 100 questions, but still, I think that a much simpler approach is very fair enough to start and also to provide very good results. First of all, our measurement of impact is not really sophisticated at all. We just measure outputs. We don't measure outcomes. We don't estimate any dead weight or complicated measure of impact that in literature, that in other experience is used. As a bank with more than 1,000 evaluation of impact every year, we have to have a system that is very, very quick to be done. I think that even starting just from some definition of what we consider impact is a great starting point, and the triple bottom line definition provided by GABV, it's fair enough to provide the framework of understanding what is impact finance and what is not, what is triple bottom line and what is not. Once I had this approach will guarantee both the analysis of all assets of the institution, so avoid any greenwashing and social washing of all these organizations that give you the number of the impact based just on, for example, on the financing towards the non-profit sector, while they're financing oil industry with the other hand. And also, I think it is needed to have a minimum set of ESG requirements from the clients that we are financing, but we don't need to have very structured or broad tools. I think it's something that from a, let's call it, technological point of view, so the barrier of collecting this information is something that might be done even with a Google form. It's something that it can be done starting with very simple tools, just to start collecting basic information to be sure that we have a procedure of doing no harm and of identifying which are the sectors of impact. And in order to do this, of course, there will be a need of people. But I think that with 1 or 2 people dedicated to this, because it's not something that can be done at institutional level for the whole institution just for a few months during the year. It's something that is a continuous work during the year, but with 1 or 2 people and a very accessible technological structure, it can be done. And nothing new has to be really invented, since the framework is somehow already there.
Thank you, Tommaso. So there is, in fact, no excuse to get started. There is always a way to move forward in this journey. And Avelina, I would like to now continue with you. So Banco Solidario is a pioneer in the use of microfinance for inclusion, for financial inclusion in Ecuador and Latin America. And Banco Solidario is a great example of the need to transform communities and countries and not just have a good financial performance. Can you explain more your work with the community?
Thank you, Adriana. For 30 years now, we have been focusing on financial inclusion. Over the years, we've banked approx 1.6 million people. That's about a little less than 10% of the overall country's population. So our connection to the community, once again, is part of how we were created, because we were the first bank to incorporate sustainability in our model, explicitly with a mission statement and all of that, but implicitly because we intentionally decided to attend to a segment of the population that no one else was serving. So that social intentionality and the relation with the community comes as part of the business model. And microfinance per se, as we all know, relies on a very close and permanent relation and support with the people. In terms of so the model per se and the business and how we do our business is very close to the community, to the client and their families. And additionally, we have non-financial services that are part of the model as well. They're not community outreach, but more, like complementing the set of services we provide to our clients. And there I would like to underline two, basically. It's an important focus on education. That's one of our main focuses, and starting with financial and business education for clients and families. We're putting financial services and products in the hands of people with not much, with none or very little experience with them. So that's part of the business responsibility. And so that's a focus that is very much oriented towards the clients and the communities. It's not only for them, it's for their families. We also work highly and strongly with clients' children, and we reward academic excellence. We provide them with materials for books and materials for their following academic year if they have a certain above average. And also on our own and with the Ministry of Education, we work on computer labs for public schools. This is important because we focus on the schools where we have a big percentage of clients' kids. But it's not only them. So it permeates to the rest of the community, and access to technology and information, as we all know, is a must now. And this is within a very poor public education system. So it has a big impact. And the second example is microinsurances that are made available through Banco Solidario to our clients. And they provide preventive healthcare, they provide curative healthcare, and they protect also against unforeseeable events. And this is also impactful in the community, in the sense that our health system, our public health system, is not necessarily timely. It's very good for very serious things, but it's not for everyday things. So and in terms of protecting the business, we had a huge earthquake 5-6 years ago, and our clients in the area affected, most of them had this insurance. So obviously, this insurance against catastrophic events, the difference of not starting from zero for them in their personal and in their business, small businesses, was huge. So right now we have approximately 12% of our client base that actively use insurances. So that has a huge impact on the person and on its family, obviously. Those are two examples of how related to the business we work with the community, not as let's do some community work. We don't really do that.
Thank you, Avelina. I hear from your shared examples that it is about addressing gaps and understanding the interconnection between the activities that you're supporting, as well as what the government might be providing and addressing when those are not sufficient for the mission objectives of your organization. And in some ways, this connect with what Tommaso mentioned, with very extensive data collection from their clients, the 100 questionnaires, although you, Tommaso, have recommended that it's possible to start with smaller questionnaires. It is really about the willingness of clients to disclose information because it's mutually beneficial as well in this instance. Now, we turn to Sharad and the case of NMB Bank. We have seen that the conversation about impact sometimes is limited to numbers and does not include the transformation of system-level drivers of unsustainable outcomes. NMB in Nepal has pioneered a blended finance program on municipal waste and renewable energy supply that is a great example of creating systemic change in a local context. Could you please elaborate? Could you explain how this is going on?
Thank you, Adriana. We have actually a couple of blended finance structured loans that we have done, but the one that you have referred to is municipal waste management project, wherein the World Bank has provided 40% of required capital on a subsidy basis. Then the client has chipped in 30% of the requirement as equity, and there is a 30% of bank borrowing. In addition to that, the local government, the municipality, has provided land required for the plant site and waste storage. So this in totality provided a great relief to the project on financing of the project. So that wise, the capital expenditure burden has been reduced for the project. So this is a structure wherein the donors contribute to a percentage, then the government as a benefactor also contributes to an extent, then that would help the client or the project owner to get a limited finance from banks and successfully run the project. In addition to that, it would have a social, environmental, and economic impact. In this case, it minimizes environmental waste, so it minimizes environmental impact. It replaces, since it produces CNG gas for households, it replaces kerosene and coal that has been used by these households. And this CNG is also, in this particular project, CNG is also used by three-wheelers. So again, that also replaces fossil fuel. And then in Nepal, a significant portion of imports is done for fossil fuel, for whether it's kerosene, whether it's petrol, or whether it's coal. So it is a part of import substitution as well. So this has a significant environmental, social, and economic impact. So it's a blend of concessional fund being provided and risk sharing or reduced risk levels, then impact objective over financial returns. So apart from the waste to energy project, we have done 300 rooftop solars, wherein government of Nepal provided 50% interest subsidy. Likewise, we have done micro hydro projects. We have 22 micro hydro projects, which benefits 10,000 households, where again, government of Nepal provides subsidized funding. Then again, we have various renewable energy technologies related projects, wherein portable solar lights and CNG stoves are financed. So there are a number of projects that NMB Bank is doing in this line.
Thank you. It looks to me in the examples you've shared, it is really about partnership with multiple stakeholders and also about making it viable while keeping up top of mind the impact, the positive impact that you want to generate, to bring about. Thank you very much, Sharad. Now we will start our next round of questions to the speakers in this session. And I also want to invite those who have joined us to please think about your questions, as there will be an opportunity to put those forth in after this next round. We have articulated there are 9 practices that values-based banks carry out that are showing what comes after ESG. And I would like now to ask the speakers to elaborate on some of these practices. Once again, Tommaso, I would like to start with you. 2 of the practices that were listed in the report talk about transparency, sharing knowledge with all the stakeholders, and connecting savers and loan customers. How does Banca Etica approach this?
Thank you, Avelina. Well, I think that the key general approach stands in the idea of a cooperative group where members are constant participants of the activity of the bank. Transparency is done throughout the normal traditional channels, so that it's reporting, the impact report, the sustainability report, and so on, but also with a practice that is common to other value-based banks, that is the publishing of all the loans given to enterprises on our website. And this gives a guarantee to our savers and to our members on how the money are actually used. Then it's also very relevant, both in terms of transparency and in terms of linkage between savers and customers, the participatory processes that we set. As I told you, we are a cooperative, and we have a dedicated office with 6 people for managing the dialogue with members of the bank. So we invest a lot in creating spaces for discussion, spaces for collective decision, and this is a central element in our everyday activity. Then, in order to specify a little bit more the possible connection between savers and customers, I would highlight 3 experiences that we have that are different among them, but that are the different views of the same aspects. The first one is the existence of a members network. It's a platform where all the members of the bank, being their households or enterprises, can buy and sell their products. So it's a common platform to have access to the products of the members of the bank. Another product that we have are the dedicated saving products. So you can invest in a dedicated bond and decide on which impact sector use the money that you are saving. Some are specifically dedicated. In some other cases, like time deposits, you can choose how to use those money according to our impact areas. And the last thing that we do is a kind of reporting that is what we call the social and environmental dividend. That means that we link the actual impact that the bank fulfills with the value of the shares. So in this way, we know that 1,000 euros of shares, that is 60 shares of the bank, may generate, for example, 32 tons of avoided CO2 emissions, or 34 hectares of organic farming land, and so on and so forth. 6 refugees hosted. Whatever. We try to link the actual impact that our activity produces with the capital that we collect. That is, of course, fundamental in order to provide loans.
Thank you, Tommaso. I think transparency is important for accountability, and so is the provision of agency to your members, so they can also have a say in what is being, to whom you are lending, what sort of real economy you're giving shape to through the lending and investment activities of Banca Etica. So I appreciate that as well, and recognizing that return is not just financial return, but there is social and environmental return, and having a metric that captures that is a powerful way of communicating how you balance people, planet, and prosperity. Thank you, Tommaso. Now I would like to move on to you, Avelina. When providing finance to customers, the report compares the criteria of creditworthiness and the return on investment in regular banks to the need for finance and the return on relationship in values-based banks. What is the vision and practice in Banco Solidario?
Thanks, Adriana. Basically here, 2 things. Under the microfinance model, and especially our model, return on relation is key for the return on investment. So it's not an either-or question. It's basically very, you don't have a return on investment if you don't have a return on relation under this model. But to begin with the first point, the creditworthiness, we're working with mostly unbanked people, and creditworthiness, it's not defined by their credit history, obviously, but rather by their effort and their work and the results of their work and their character. Their willingness, not only their capacity to pay, but their willingness to pay. So within the risk analysis model, we also have a set of non-financial variables to estimate character, willingness to pay, etc. So we include several social demographic variables and in the scoring system, and this is complemented by a very personalized interaction between the credit advisor and the client, which includes, understanding their businesses, sometimes mapping with them their financial their financial sheets, their balance sheets, etc., to understand their situation in black and white. So it's an integral part of the model, the relationship to work on the credit worthiness. It's more like the social worthiness that you mentioned. How does return on relation look like for us? Basically, very low desertion rate, 10%, high loyalty and fidelity. We have strong NPS numbers and a client satisfaction of over 80%. And we have good repayment rates. Our NPLs are like 3.7%. And we're working with vulnerable populations. So there is a very, close follow-up, as we mentioned, that's our purpose, is to accompany our clients. And 30% of our microcredit clients stay with the bank for more than 5 years. So we don't have a big overturn. A strong focus on women is also very important in this relationship focus in the return on relation. 57% of our microcredit clients are women, 54% of our overall clients are women. And this is important because they, for example, the female segment of our clients, this is our experience and we have the data, value the non-financial services more than men. They have higher satisfaction and recommendation rates. They use more in a much larger proportion financial education and the microinsurances, they tend to stay with the bank a bit longer. So we know that given the traditional form of our society, still the involvement of women has a stronger effect on the family, on the children, and it also the financing of women, the financial autonomy or independence of women has an impact on society at large. We still have in the financial sector women above 15 years, for example, 58% of women over 15 in Ecuador have a bank account, whereas 71% of men over 15 have a bank account. And we have a similar difference with credit, 15 versus 32, even bigger. So there's still financial exclusion. In specific examples in terms of product innovation and portfolio to focus on relationship, the pandemic gave us several. We were the only bank in Ecuador to contact all of our clients to see how they were coping and how they were dealing and their health and general well-being. We offer a number of different refinancing currently and back then refinancing options. In one of our products, we also offer either monthly payments or a lump sum payment at the end. And one very recent innovation we did focusing on relation was that we are providing our business clients, our small business clients, with security kits. The security situation in Ecuador is not doing very well these last years. It's become a pretty violent, insecure place, unfortunately, and we are providing security camera, panic buttons, alarm kit to protect their businesses. So this is obviously beyond the financial relation. It goes more to the integral relation with the client, but it has to do with our business because we're protecting their small business. So basically, we rely on the relationship for both financial and social results.
Thank you so much, Avelina. It is clear that in having a close relationship with clients, you can anticipate both when they are likely to be encountering difficulties, but also provide the products and services that they will need to overcome the situation that they may find themselves in. And Sharad, before we move on to opening the floor for questions and answers for the audience, may I please invite you to speak to the following question. So one of the practices is noting that sustainability is not an add-on nor a checklist. How does NMB Bank tailor the institution to deliver a positive impact? How do you broaden ESG screening to impact screening?
Thank you once again, Adriana. I think at NMB Bank, I would say ESG has been integrated in business decisions and bank operations, not only, like you mentioned, as a checklist, but it is an impact assessment. Impact assessment in the sense that it would assess and see if there is a sustainable solution that we can provide to our clients. And on the other hand, we would also check whether it would require any avoidance of negative impacts, or we need to avoid the proposals altogether. So it's not just a checklist or add-on, but it provides opportunity to see whether there are sustainable solutions or it is something to be avoided. So that's on the ESG integration part. And we consider this ESG or sustainability in two parts. One is sustainable business, and the second is sustainable practices. On the sustainable business side, we are focusing on financing certain impact-generating business or proposals, which would be innovating financial services or products. So we can have green home loans, we can have electric vehicle financing, we have women entrepreneur loans, we have loans to migrant workers who are starting their own businesses, who have come back from their working places. So these are financing services and products that NMB Bank provides to make an impact towards environment or make an impact towards social upliftment. On the other hand, on sustainable practices, we look toward being responsible towards environment and society. So there could be a sustainable business, but on top of that, in addition to that, we also see that whether the businesses that we are financing are practicing sustainable standards. So that's again being responsible towards society and not just considering ESG as a checklist only. And on the impact screening, you mentioned like it's not just a ESG sharing and impact screening. We would say that what kind of impact is it happening, making towards the society or the environment that we have been financing. So it could be jobs created, it could be reduction of emissions, it could be improvement of living standards, it could be innovative technologies that would say, for example, provide efficient energies or alternative energy solution that would reduce emissions. So these are impact screenings that NMB Bank has been considering. And again, in all the financing activities that NMB Bank is carrying out is aligned to investment towards SDG goals. So whether it's reducing poverty, so then if we finance microfinance sector, if we finance SME businesses, or we like I mentioned, if we try to uplift women entrepreneurs or returning migrants in the country, it is in a way supporting reducing poverty. And we have significant investment towards health in hospitals and medicine producers. We have a significant investment towards education sector. We are financing towards proposals that promote gender equality, then affordable and clean energy. We are focusing on how we can make an impact toward climate resilience and improving living ecosystems. So these are the areas NMB Bank is focusing and providing financing. So ESG is just not screening, it's impact screening. And lastly, sustainability ambitions that the bank have and the transparency that we intend to have. That's why we have certain disclosures that the bank makes and make sure that the regulators and the stakeholders or the interest parties what kind of sustainability ambitions the bank have and how far have we been successful in achieving those. So in all, again, all these activities about banking on values that NMB is aspiring and working towards.
Thank you, Sharad. If I may stay with you for a moment, now that we have been receiving very relevant questions from our audience. Julie Emmerich asks, are you able, and if so, how, to offer affordable debt despite current high interest rates and safeguard minimum returns on your lending activities? And she clarifies, in other words, how do you reconcile financing for social and environmental objectives with profitable financing activities? Could you briefly speak to this?
Yes, I can speak about NMB Bank and Nepal in the context. And I would say that there are a couple of areas that helps us. For NMB Bank, we are a commercial bank as well. So we have a commercial portfolio at the same time while we are running value-based banking. So we can afford to have a section of our portfolio as commercial lending. And we at the same time parallelly focus in value-based banking. So at times we see that we are at even when we are at break even, we make sure that we are in our intended value-based investments are or the portfolio is growing as we intend, while the returns are ensured by the commercial side of the portfolio. In addition to that, the government, the central bank also provides interest subsidy and subsidized loans. So there is a support for the central bank as well in Nepal. And again, the blended finance structure that we talked about, wherein the costs are taken by other parties of the blended structure, is another solution that we think about. That's a couple of solutions Nepal has been working on.
Thank you. Thank you very much. This question I would like to ask Avelina, as you spoke of the SDG goals earlier in your participation. Cornelia Schmredner is noting that almost 40% of the decade of action has already passed. Do you think the global finance sector is actually aware of its role for them by now, and that they can still achieve the UN SDGs, that we can still achieve the UN SDG goals by 2030?
Thank you. I'm not so sure that there is all that much awareness. I can speak of my region, probably my country, where we're still dealing with some basic, issues in terms of poverty, unemployment. Now in Ecuador specifically, we used to be this island of peace between complicated countries, and now we're no longer an island of peace. We have, we're now up there in the dangerous countries rankings, moving up very quickly. So in terms of the whole drug-related problems, so I think we're all busy with very pressing issues. However, I do see in my country and in the Latin American region much more awareness about the SDGs as a tool, let's say, but more the idea that we cannot have healthy institutions in 6 societies, and that we are a part of the context, and we have to work towards improving our countries as a whole, and that makes social sense and it makes business sense. There's finally a merge between sustainability and social sustainability with financial and economic sustainability. They are realizing that, the governments are realizing that, so there's more regulation in that sense, while dealing with all these other pressing issues. I would think that I don't think 2030, it's right around the corner. I don't see how we're going to make it, but at least we're moving towards there. At least the financial and the productive sectors of our countries have realized that it's a must. The governments still use it as, it's nice. It's a political platform, but I think the actors, both financial, productive, commercial, are going towards that. And I would say that more developed parts of the world are closer to that, North America, Europe, Asia Pacific. You guys are in a different stage of development and have other priorities. So even though we're all as a world community dealing with some new super pressing social, environmental issues.
Thank you, Avelina. We have 2 minutes left for this really interesting session, and we have multiple questions from our participants, from our attendants. Before closing, Tommaso, can you please very briefly speak some more how to calculate, pardon me, this is a question that is raised by Tatiana Kalinina. She asks, can you please speak more about what place does the internal culture of the financial institution play in moving beyond ESG? If a financial institution goes beyond ESG, if they set this strategy that way, what does it mean for the internal culture? Does it need to be in place to support it?
Yeah. Well, first of all, my regards to Tatiana. Nice knowing that she's there. Culture is crucial. We always say that our loan officers are different from the loan officers of other banks in Italy, because they have to do the work of the usual loan officers, but they also have to be able to read the ESG profile, the responsibility profile of our customers. So its culture is training, and also is structured tools. So we need to have planning and control tools that include non-financial targets. Otherwise, if you have these general targets, but you don't put them into your planning and control systems, your branches and your managers will necessarily focus only on the financial targets. So, of course, we have our limitation, we have our exclusion criteria. There is something that they cannot do, but still there might be some let's call it conflict of interest between the financial objectives and the other targets. So it is important, besides culture, that still is crucial, is fundamental, is the starting point, is non-amendable. But we also need more sophisticated planning tools that include other non-financial targets.
Thank you. I have been informed that as long as the speakers have a few more minutes, there's several other questions I would like to raise. I'd like to stay with you, Tommaso, if you have a moment. How to create a value indicator in new economic models based on sustainability, regeneration, and exchange of services? Can you speak to that? It's a question that Carlos Arturo Quiroga is asking.
That's quite complicated. We developed, for example, an ESG, an internal ESG rating that somehow reflects our priorities, our values, and I know there are many of these tools around. The latent variable, so the concept that you want to measure and assess is not directly measurable. So you have to create your own tools in order to monitor if the values that you want to follow are actually fulfilled with the activities that you are doing. There is no one recipe. There is no one indicator, there is no one solution. There is a reflection, there is complex data collection, and well, it's impossible to give an answer right now, but it is possible to, of course, to discuss and to more and more try to find information that is able to satisfy your information requirements.
Thank you, Tommaso. I would like to ask Avelina. John Ulrich asks, what is your main obstacle in order to serve your customers or converting a request proposal into a business relationship?
Thank you for the question, but customers as in clients?
Yes, clients.
Well, basically here in Ecuador, we have interest rate caps, and the interest rates are, unfortunately, the methodology is not much of a technical methodology. It's more of a political thing, and it's probably, as in every other place in the world, it's a political issue, but here it's used a lot. So it's very popular to say that interest rates, especially for microfinance, where the poorest segments of the population are, need to be very low. So, how do you explain that if you can't cover your costs, you cannot lend money? I would say that's our main problem, because we have the know-how, the methodology, the model, and the corporate culture to cater to these segments of the population. And but if the price is fixed in such a way that we cannot cover costs, unfortunately, we cannot provide them with what they need. I would say that's the main restriction. And we're not saying that interest rates have to be super high, but they should be, they should sort of accommodate it according to market dynamics and have controls, and then we have the whole client protection things and everything in place, so as to make sure that you're taking care of this population. But that's our main obstacle.
Thank you. And Sharad, the last question for today. How do you make sure that all your stakeholders conduct their daily activities with unquestionable ethical behavior? Manolo Vega asks.
Thank you. That is a difficult activity, actually, indeed. But since it depends on your engagement with your stakeholders, whether it's the shareholders, whether it's the clients, whether it's the community. So if you have a ethical standard of your own, then you measure it on the basis of the standard you define as your organization has set. So this is the standard that we adopt. So that would be the yardstick for us to see whether our stakeholders are also reciprocating to that standard or not. And then it is for the organization to decide whether how it would like to react to those questionable ethical behaviors. So whether you would like to not engage with that particular stakeholder, or whether you would like to question that, or whether you'd like to discuss those behaviors. So I think that internally the organization needs to have its own yardstick or its own standards where it would like to place itself. And based on that, it could interact with its stakeholders and ensure that whether or not, or how to go about with the ethical behaviors that is not acceptable or is to be discussed with its stakeholders. I think I put it that way.
Thank you, Sharad. It brings to mind the principles that you were discussing earlier relative to engagement, close client relations we have heard of as well in this case. I would like to bring one question that is often asked, and this is mainly regarding product innovation. I'm not sure if we could have all speakers at the same time on the screen, and very briefly ask them to please speak to the question of expansion of innovative products. In a highly regulated market, how are you able to introduce positive social and environmental products in your markets of operation? How is it that you are able, and isn't regulation preventing you from actually engaging in product innovation?
Would you want to answer that first, Jen?
Tommaso, if you want to start.
Well, we have started to develop a few specific products, mainly on environmental aspects, but more specifically, what we have been doing is introducing some covenants on social and environmental behaviors of organizations. So right now, more than trying to finance specific activities with some products, we do try to introduce discounts on prices to those clients who show some improvements in their social responsibility profile. This is actually the way that we are following in this phase, both on the side of decarbonization, circular economy, but also on legality and on other certification which guarantee the quality of work and the quality of administration inside companies.
Thank you, Tommaso. I understand you need to leave us. I want to express my gratitude for your participation in this conversation. And please, yes, we understand this has extended your time. Thank you so much, Tommaso. Avelina, please, could you speak a little bit more about innovation in your market, product innovation in highly regulated markets? How is it possible to do so in Ecuador?
It's hard because of, exactly, highly regulated doesn't leave you much space, but not everything requires all that much amount of money or all that much amount of technology. We have been using increasingly, as everybody, technology apps, to be able to make processes more efficient, the use of methodologies within the phone, for example, of credit advisors helps a lot. We have a product called Microemprende, which is exactly that. It's small, super small businesses that we track through the advisor's phone. But beyond technology, I think also it's a matter of seeing what you can put together. I mean, one last technological thing. We instituted the whole environmental and social risk analysis, and instead of having my credit advisors do this, by hand practically, we developed a mini Solidario app. So yes, technology does help. One, for time, for resources, and for standardization. We can't afford each person to do this according to their own perception. So this is standardized and helps us have the data online and all of that. But aside from technology, two quick examples. For example, using a credit card, our credit card product. Given the segment of the population we attend, for example, last year we worked a lot with a $300 cap credit card. We had a lot of female customers there, because since their risk is lower, we can go further down in the socio-economic range with women, and it worked pretty well. It was innovative in the sense that you have this tool, but you have a $300 maximum allotment that you can use, and it's calculated based on your capacity to pay, and it helps you not prevent over-indebtedness. And then another one that is a credit card for our micro entrepreneurs, because they not only have the need for business financing, they also have the need for consumption financing. And we give them this credit card taking into consideration their other loans, so it's an integral management of the client. Obviously, it makes business sense for us, but it's also innovative for them in that they are they're working with the same financial provider in organizing their finances. They receive courses, they receive financial education, and we also monitor the amount that they can use so as to not over-indebt the clients. What the problem we have in this country is with the cap on interest rates. We're all lending to the same people. Inclusion has been damaged, harmed by this interest rate. Last year we included 30% of our clients. 33% were unbanked. Before that, we used to have 60-70%. So we have to be very careful of over-indebtedness.
Thank you so much, Avelina. And I am aware, Sharad, we have heard in multiple sides to these product innovation questions. So to conclude this session, I would like to ask you one question, Sharad, and this is, how can this kind of values-based banking, how can this practice of finance that has positive impact on environment be used to influence banks to incorporate the philosophy? How can we influence banks, traditional banks, to incorporate the philosophy of values-based banking? Sharad, if we could close with that, I would be grateful.
Well, thank you, Avelina, for the question. I think it would require engagement of all stakeholders. So it would be the government of the country, which should support on a strategic level or a policy level. It could be the central bank, which could, again, support from a policy level for the banks to see that it also has the responsibility of adding value to society apart from being a bank alone. So that's, again, from the central bank's perspective. And as far as the industry is concerned, if one bank is considering value-based banking, then since the policy requires them to follow that, then the industry would be at a level playing field for all the banks. So that would, again, support. So the industry needs to understand, then probably creating awareness or generating that culture within the banks that they need to focus on values as well, or impact investing as well. It is coming up with all the activities happening, all the stakeholders being concerned about environment and society. Then again, the investors, they need to also see that whether their investment is going towards creating value in society. So it's a collective effort of all the stakeholders that would, in addition to the intent or the objective of the banks alone, that they want to do something for the environment or society or generate impact and focus on value-based banking. They may, like in any bank, they may have a portfolio of where they will focus on profitability alone. But if they can blend it that way, or even 100% value-based banking could be there. So one is the intent of the organization itself. Then it is, again, the effort of the other stakeholders, whether it's investors, whether it's regulators, whether it's community at large. Then it is, I think it's a collective effort. But firstly, definitely it's the commitment of the organization that they would want to focus on value-based banking.
Thank you very much, Sharad. Thank you very much, Avelina. The 9 practices that are collected in the report can be crucial to transform the financial sector into a force for social empowerment, environmental regeneration, and economic prosperity. During this conversation with Sharad Tuladhar, Avelina Perez, and Tommaso Rondinella, we have explored how these institutions are providing alternatives to the market to advance positive outcomes, to transform their communities and their economies. We have also discussed how they're seeking to provide solutions that address mismatch between benefits and effects of the activities, lending activities, and how it is possible to work with all stakeholders involved in the financial sector and the financial sector activity to make sure that the market rewards the sustainable practices and also that the structures support and strengthen the activities that are resulting in positive environmental, economic, and social outcomes. So I want to thank you all for joining us today. After a 1 hour and 19 minutes, I am very happy to say we still have 59 participants interested in this conversation. Thank you for your time. Thank you for making concrete the practices that are expressed in the report, to helping everybody who has been participating and listening attentively see how it is in fact happening. It is already happening. Financial institutions are making lending decisions that are transforming their communities, the shape of the real economy towards a low inclusive future, low carbon inclusive future. Again, thank you and have a very good day.